EV makers broadly lower as well today. Names like Tesla and NIO weighing heavily on the NASDAQ 100. Even EV-adjacent stocks like ChargePoint and EVgo are caught up in the selling as those supply chain disruptions and material shortages weigh on the industry. You mentioned Tesla, Dan. You're nibbling in the triple Qs. Would you be buying Tesla at these levels?
Nope. I mean, listen, Elon
There's
Musk is
a lot of Twitter
unraveled.
noise. We don't know what's going on with the deal. I guess the concern also now is China. And Wedbush, Morgan Stanley, both raising the flag on margins and China supplies.
Yeah, no, I would not be buying it. And I actually hate the fact that it's a top 6 name in the QQQ. I think it's going to actually drop out of that top 6 in the not so distant future. I think the stock has a lot of room to run. And I got to tell you, if a large part of the premium in this stock is because of the aura of Elon Musk, well, he's unraveling before our eyes on Twitter, the company that he wants to personally buy, but he can't afford to buy it because Tesla stock keeps going lower. Okay, so I just think this is a big mess. And I'll just say the last thing. I've been in the markets for 25 years, Sarah. Every single mania and every cult stock leader, they've all imploded. This is the last one. I think it's starting to happen right here. So I would not be a buyer at this thing at 669 or 666 or whatever he thinks is funny about this, the price of the stock.
So, okay, let's hit the broader market because we have seen a pretty strong rebound here into the close. Huge intraday comeback. Dow, S&P 500, and NASDAQ still on track, though, for weekly losses. We're seeing real estate, healthcare, staples, utilities, and energy now stronger. Those are the sectors higher. Consumer discretionary industrials are lower. Technology just popped into the green as well. The Dow down only 14 points. What are your thoughts heading into the weekend, Dan?
Yeah, I think things were getting pretty nasty, Sarah. I was looking at JP Morgan just an hour ago, was making a new 52-week low. And we know that the banks are not the epicenter of what's going on here in this valuation correction. But a stock like that had been leading the S&P to the downside, never confirmed any of the new highs in December or January. So I guess the point that I would make is that things were getting really, really oversold. The precipitous drop in a stock like Apple, even Tesla, on a near-term basis. Look what happened to consumer staples. Your consumer staples this week, they absolutely got nailed. So I think a lot of negativity was wrapped up in this week. We had that down 4% day in the S&P and 5% in the NASDAQ. That felt slightly capitulatory here. So I guess my point is the markets, don't go down in a straight line here. And we've been down about 16 or 17% from the late March highs. So we're going to have some fits and starts. I think it's going to be one step forward, 2 steps back.
Okay, so the Dow and the S&P are about to go positive here in this dramatic reversal just in the last few moments of trade. For all the hoopla about the bear market, it doesn't look like we're actually going to close in a bear market for the S&P 500. We're now 19% off the highs, those all-time highs that we hit in the beginning of January. Dow has just turned positive on the session. Really quick, Dan, so you think this is just a tradable kind of bounce? Doesn't change your fundamental outlook, which sounds very bearish to me.
Well, it's not very bearish. I think it's going to take some time for this bear market to play out. I don't really care what the definition.
What do you mean? You just said recession in 6 months.
Yeah, well, here's the thing, Sarah. Maybe the stock market will start to discount a recession. We're not going to know there's going to be a recession until after the fact here. So, I mean, I just think that you got to take a step back here. I'm not calling for a stock market crash. I think large markets of the stock market have already crashed here. So now we're waiting for some of these larger components of the major indices to do it, and that's happening right here. So I think you're going to see lots of stocks and major indices retrace back to those pre-pandemic highs. The S&P, that's 3450. That's down 30% from the all-time highs. The NASDAQ would be down 45%.
It's true. A lot of the bad news has to be in there already with these kind of levels. We are 19% off the all-time highs on the S&P. Dan Nathan, it's been great to have you here for Market Zone.